My name is Jeff Agee, Chairman and CEO of First Citizens Bancshares. Today we're going to start off with our slide that references the American Bankers Association's best banks to work for in the United States. First Citizens went from number 52 the prior year to the current year ranked number 22. This is very exciting to us. It's the 22nd best bank to work for in the United States. Some of the hot topics with our company right now continues to be retention and recruitment of our teammates. This is a hot topic with every single company, large companies, small businesses. It's just a big thing going on right now in the industry, and recruitment and retention is very high on our strategic list. I'm so proud of our recent Facebook likes. We recently went in excess of 10,000 likes at First Citizens, and this is a major accomplishment for our company, and I'm very proud of our marketing division, especially with Molly Carpenter and the things they have done there. So we're very pleased with that. A great marketing tool for our company. Our subsidiaries and non-interest income sectors are critical to the success of First Citizens. As you can see, mortgage, trust, brokerage, and the insurance divisions all together, pulled together through the first 3 quarters, $6.2 million. Very impactful to this company. Our current stock trading value is $63. We're putting pressure on that value, and we're continually trying to drive up our earnings per share, as you'll see in just a minute, and hopefully over the next quarter or two, we'll continue to try to drive that price upward. One thing that's going on with our company and in the banking industry, we're seeing asset quality hit very good positive positions. Matter of fact, record positive positions in our company's case. This is loans past due 90 days plus non-accruals. We call these non-performing loans. The lower the ratio, the better. You can see each quarter in 2021, starting with March, we were at 0.28%, and that gray graph to the side is our peer banks that we compare ourselves to in the United States. You can see in every one of those quarters, we are less than peers, and that's the position you want to be in. For example, September, the most recent quarter, we were at 0.24%. Peers, as you can see, is much higher than that. So we're very proud of our asset quality positions right now. Dividends. This is great timing to present this video because our board just yesterday approved a special dividend that will be paid in December of 50 cents per share. We've been paying quarterly 35 cents per quarter, and then you'll have a special Christmas bonus of 50 cents. So the cumulative dividends for 2021 will be $1.90, and you can see that's 10 cents better than the prior year, going down to $1.80, and then 2019 it was $1.70, and then $1.60. So incrementally 10 cents per year. We're going the right way with the graph. This is a beautiful graph, just like the next few will be also. Now, a big barometer that drives the stock price upward is earnings per share. Going back to 2019, we were $3.38. 2020, $4.11, and our most recent current quarter of $5.13. Again, a great trend for earnings per share. Total assets. This is a graph that's we've talked about. Some of our past leaders would love to see. You can see going back to 1970, we were 42 million in size. Going to the year 2000, we were 726 million in total assets. 2010, 975 million, and then last year, year-end, we were basically 2 billion, and just recently, we hit the $2.2 billion mark. We just hit the 2.2 billion mark this past week. And as you can see, that is almost approximately $200 million bigger than the prior year. As I told our board this past week, that is the size of a small community bank that we have grown without no acquisitions in 2021. So that's great organic growth. We're very pleased with that position. So we're going to continue to execute on our core fundamentals going forward. First of all, we're going to continue to get the right teammates and retain those teammates. We're in a great, they're calling it the great resignation. Right now, we call it the turnover tsunami also. It's very challenging, but this is critical to us, as we alluded to earlier. We're going to execute on our core values. We're going to continue to be people-centered. We're going to stay in that low to moderate risk zone. We're not going to take a material risk in any type adventure or venture with our company. And we're going to continue to raise the bar. So we're going to try to continually get better as we do every year. And it will be a challenge going into 2021, but that will be our goal. So our future. This is going to end up by the fourth quarter. When we come back to you in January, should be a record year in many different barometers and ratios that we actually review. And again, it will be a great year. 2022 is going to bring some challenges. We call those opportunities, and we're going to do our best again to make that a record year next year. But it will be very challenging with the many barriers coming our way in the banking industry. So I want to thank you for your support and your investment in our company. And as we normally say with our teammates, carpe diem.